everyone, this is Kathy Lean with BK Forex. I want to talk about how to trade non-farm payrolls when it's released on Good Friday. Good Friday is a federal holiday, which means that U.S. equity and bond markets are closed. But the futures market as well as the Forex market is open, so there are traders who are itching to trade. Now, NFPs on Good Friday is a relatively rare occurrence, but it does happen. The last time it happened was in 2021. And before that, 2015, and before that, 2012. So basically about every 3 years, give or take. So we do is we take a look at some of the price action in the past years to give a sense of what this could mean for price action, this non-farm payrolls. So this is what happened in 2021. When we had NFP come out, and the number was a blowout number, 900,000 against 600,000 expected. You can't get a bigger surprise than that. And that day, dollar yen only had a 20 pip range, which is pretty much nothing. Euro dollar that day, even though we had a blowout NFP number, big surprise, only had a 37 pip range. So these two charts suggest to us that we can't expect much even if there's a big number. But I wouldn't draw that conclusion because in 2015, when NFP released, we had a big disappointment. The number was 126 against 244 expected, so about half of what was expected. Dollar yen moved 110 pips that day. And so that's a fairly good big move off of a non-farm payrolls report on a holiday. Euro dollar had a smaller move, but a sizable one, 75 pips. Now, my charts don't go all the way back to 2012, but I can tell you that in 2012, we had about 130 pip range in dollar yen. And let me just check my notes here. We had a 30 pip range in the euro dollar. So what does that tell us? What the numbers tell us is that you can't draw any fast conclusions. Sometimes there's a big move, sometimes there isn't much of a move off of non-farm payrolls when it's a Good Friday. Now, a lot of it has to do with Fed expectations. In 2021, the Fed was very transparent about what they were doing, and the market had completely discounted and expected the Fed policy actions. Now, in 2015 and 2012, the market was more at a crossroads, and they weren't very sure, and the NFP report played a much bigger role in affecting positioning and market expectations. And that's kind of the world that we live in right now, because right now the market is divided on 25 basis points or no rate hike from the Fed come May. So they'll be looking at the non-farm payrolls report very closely to either reinforce their view that the banking crisis concerns are not that significant and the Fed should plow forward, or cast doubt on what the market currently expects, which is another quarter point move in May. Either way, the best decision to make is really to stand down because there's a lot of trading opportunities. There's a lot of trading days in the year. I don't trade on holidays. I typically don't trade ahead of non-farm payrolls. We've got two events, two of those things happening on one day. So the best advice I have for you is to take a Friday, enjoy the day off, and come back fresh next week.